Let's talk about what happened, what we got last week. I think they showed a lot of confidence coming out with all that announcements of rate cuts and something on the fiscal side as well before the market opened as well. How did you read this? It's because some were saying that this is just not enough. This is just part of the drip feed approach. You disagree.
I would say this is actually all about perspective, because when they had this rather impromptu joint press conference, many people were comparing it versus the September 24th press conference from last year, which obviously created this significant market rally. So I would say if you compare to that particular media conference, unfortunately, yes, the package is not as impressive. But I think the market may have kind of overlooked some of the small changes. So one area that we're looking at is that by combining the two quotas for security lending, for stock purchases as well as stock buybacks, it actually effectively expanded quota for the stock buyback program, which is a lot more popular than the security relending program at the moment. So there could be, think about it as effective expansion in some of the more popular program, which I think the market hasn't fully understand the difference yet.
So like China's version of Value Up program that Japan is doing a good job in and South Korea is attempting to give it a go. Is that what you're talking about?
Yes, I think corporate governance is something that even the policymakers themselves during the press conference have stressed multiple times. And I think the Chinese policymakers clearly watch how Japan equity market has benefited from the past 5-10 years by really pushing through the corporate governance reform. And as you mentioned, Korea is also trying to borrow some of that spirit as well. So I think within the entire region, there seems to be this push, including even the Hong Kong market as well. There needs to be more kind of shareholder value focused approach.
And we're paying a lot of attention to what's going on in the Forex market, obviously, and the Taiwan dollar caught a lot of attention. And you're watching the strength in the Hong Kong dollar, and then you're feeling very bullish about Hong Kong equities. I get that. This could mean capital inflows and so on. So is China, Hong Kong, your best idea in the region, or is there some area that people are not talking about just yet, but you think that people should be talking about?
Got it. I think in the very near term, the Hong Kong market will be a very tactical catch-up rally. And I say the word catch-up rally because if you compare all the major indices between today versus pre-Liberation Day, let's say April 2nd, many of them have fully recovered, if not exceeded, the pre-Liberation Day level. The Hong Kong-China market are the only two major markets that are still trading slightly below. So as we get a little bit more clarity from the U.S.-China trade talk over the weekend, perhaps the market is willing to give the benefit of the doubt and trying to kind of cover that gap. So in the very near term, that is our view. I think in the medium term, there's still a lot of uncertainty regarding how these trade deals will be negotiated. So in that sense, we'll prefer a relative value approach. And in one area that we quite like is long Korea versus short Taiwan.
Interesting. Marty?
Hey, Jason, good to see you and appreciate your time. Listen, you've got CATL, the Chinese battery giant, doing their Hong Kong IPO. I think we're a little over a week away. I think it's next week, Tuesday, right? What has demand been like? And I note the pricing is at a slight discount to Shenzhen. So what's going on there?
Sure. I think that's a great question because in Hong Kong, we are often driven by major capital market events. So if you look back at September last year, we also have another major Chinese IPO, which may have kickstarted some of the return of foreign capital into the Hong Kong market as well. So I think unlike the China onshore market, we often think that having large IPO is actually beneficial for the broader capital market because it tends to attract more foreign flow into the market. And the fact that, as you mentioned, Hong Kong dollar sitting on a strong band seems to suggest that there is a decent amount of demand for Hong Kong dollar denominated assets. So I think we'll be looking forward to the reaction once this particular company got listed, because it could potentially renew some of the optimism on China technology related stocks as well.
Jason, I noticed that in CATL's prospectus, though, it got a waiver from HKX to not publish a minimum price the shares could be sold at in order so as not to affect the trading of its shares in Shenzhen. This is kind of unusual, isn't it?
That's a great question. I think the broader kind of key here is that as you look at some of the policymakers' comment, even from last week's media briefing, they mentioned that they want to continue to encourage Chinese company to go raise money in the offshore channel, and Hong Kong continue to be one of the main channel for that. So perhaps I think we are now seeing more micro adjustment in terms of how the Hong Kong capital market will accommodate these big companies coming to Hong Kong market to raise capital.